Here are the top mistakes for home buyers in 2024. These mistakes really could be the difference between getting your dream home and having it slip through your fingers. Avoid these mistakes at all costs. And sometimes, look, life happens. But if you know what the mistakes are, you can do your very best to try to avoid them and get to the finish line with your home purchase. Mistake number one, not getting pre-qualified with a lender. And the pre-qualification process may look different depending on the lender that you're talking with. Here's what I know. Provide your documentation up front. We see so many buyers that maybe have already spoken to another lender, and by the time they get to us, we take them through our pre-qualification process, which is really involved. And when we ask for documentation, they're like, oh, well, the other lender I talked to didn't require that. Let me tell you, the devil is in the details, and it's all about the supporting documentation. You don't want to go through this process, get your hopes up, go under contract with a pre-qualification letter that doesn't mean anything. Going through the pre-qualification process means this: having a detailed conversation about your financing goals and your life goals with the lender. The more they know, the more they can strategically put together a loan program that best works for you. Secondly, they're going to have you complete a loan application. They're going to review it with you, making sure that everything you included on that application, if you did it online, is accurate, because accuracy is a key to a successful home closing. The lender may ask you for your documentation. Now, here's where we see a lot of lenders just not go to this stage because they don't want the friction. We know it's a hassle. Many times, buyers are like, oh, I have to go find these or that. It's a mistake not to provide the documentation to the lender. And then once the lender receives it, they gotta look at it. Working with a lender that is that committed to making sure that the documentation is reviewed, that the lending guidelines are checked, that checks and balances is done up front early on in that process is gonna set you up for success. Mistake number two is changes in employment. Now, this really does happen. I don't make this stuff up. Having been a lender for over 27 years, we have had buyers that have gone through the pre-qualification process. We've turned that into a pre-approval, know the difference, by the way, and we have them out shopping. Well, sometimes people decide to quit their jobs or quit their stable income job and become self-employed, or maybe take time off that's not paid time off. All of these things can impact your home loan pre-approval. So be sure to communicate with a lender before you make any changes to your employment or your income if employment is being used as the qualifying factor on your home loan. Another mistake is co-signing for somebody else during the time that you are going through the home loan process yourself. Co-signing can be a problem because it is adding an additional debt to your debt to income ratio, even though you might be co-signing for, let's say, a child on a student loan. This really did happen. We had a buyer that was under contract. They were moving to Arizona, very excited about that next chapter of their life, and we're midstream of the home loan process. So we're getting ready to close in about 10 days, and we get notified that there's a credit inquiry on the buyer's credit. Know this, lenders are going to monitor your credit profile from the time you're pre-qualified to the time you close and get your keys in hand. So we got an alert, we reached out to our buyer and said, hey, this company has pulled your credit. Can you tell us what's going on? And he said, oh, I just had to co-sign for my daughter on her student loans. Well, his daughter was in medical school and he had co-signed on a $300,000 student loan. Now, even though the daughter very likely is going to pay it, he's still legally obligated because he's co-signed for it, which meant we had to now calculate that into his qualifying ratio, which almost blew that deal up. Now, fortunately, we were able to work through it and get him into his home. But just know all these little things that go in the process that many times you're just thinking, oh, no big deal, can be a big deal during the home loan process. Another mistake, once the lender has pulled your credit up front, try to keep that credit profile as close to what it was at that point in time. Generally, credit is good anywhere from 90 to 120 days, which means that as long as you buy the house and close on your home loan, your lender's not going to have to re-pull credit. But during that time, they are going to monitor your credit. So again, watch your purchases, watch opening new credit, buying a car, buying appliances. All these things will impact your home loan. So making sure that you are avoiding and really reducing credit inquiries, opening new debt obligations, etc. And if you have to, for whatever reason, be sure to talk with your lender and have them give you insight. Will it impact your home loan approval? And if the answer is yes, how it will impact it. And maybe you wait and not open that new debt obligation. And when we think about maintaining that credit profile, do your very best to avoid any 30-day late payments, because that's what's going to impact your credit score. And if you're out there shopping and it's taking a little bit of time, and let's say now your credit report is expired after that 120-day period and the lender needs to re-pull your credit, your new credit score is what's going to drive your pre-approval. So if you've had a 30-day late payment, it could impact your credit score dramatically and put you in a position that you can no longer qualify. Or if you've increased your debt load and now your debt ratio no longer works because now you have more debt, whether that is new credit card debt or a new car payment or a new motorcycle payment. Yes, all these things really do happen. So you want to avoid all of that during this process. And here's another one. This mistake, people really do make this, so I want to make sure that you're not making it, and that is don't spend your down payment or closing cost money. When you're going through that pre-approval process, you're verifying with the lender what your assets are, where your down payment's going to be coming from. You want to try to maintain that until close of escrow, because if there's anything that materially changes in your assets, then it could impact your ability to qualify. So again, just communicate. If something happens, life happens, you need to replace your air conditioner, again, proactively reach out to the lender, walk through the strategies on the impact to your home loan. And one of the biggest mistakes I see people making today is waiting. They're waiting for interest rates to drop. And the reason that that is a potential mistake is the real estate market is all based on supply and demand. And so with rising rates, we've seen less demand, which means that the buyer's opportunity to seize this moment and maybe better negotiate the terms of that contract, or in some cases get a seller credit towards closing costs. Once interest rates start to drop, that buyer demand, and there are so many buyers out there on the fence, it's going to come back, and it's going to come back fast. And we've seen this before, where now as a buyer, you're not competing with a high interest rate. Now you're competing with other buyers. And we see multiple offers on properties. We see seller credits go away. We see the ability to negotiate price on the house go away. So just know, if you are out there and you are waiting for interest rates to drop, now maybe you have to because you can't qualify at today's rates, but if it's a want to and not a have to, just reconsider that and talk to us and let us show you what that really looks like from a strategic financing standpoint. If you find any of this information valuable, please subscribe. It not only helps me know that this is valuable content and to keep producing it, but it helps me to bring other resources in. So please take a moment and subscribe. And since we're on this topic of mistakes, there are some other mistakes that people make as they move through the home buying process, outside of just the mortgage stuff, which is what I've talked about. Some of the mistakes we see people make is they buy homes not having a home inspection. This thing is really important, and I get you want to try to keep your costs down, but this is a cost well served, because the home inspector is going to go in and tell you all of the things that are going on in that property and give you the insight and give you the ability to do your due diligence so you know what you're getting into. Waiving the home inspection is a mistake that you may not be able to afford depending on what's going on in the house. You know, a lot of times the house could look beautiful. Maybe it was just redone. You don't know what's going on in the inner workings of it. And that's what a home inspector can get you and share with you. So then you are educated, you know what you've got, and then you can make a decision moving forward. Got to have that home inspection. The other mistake is waiving the appraisal contingency. Most real estate contracts throughout the country have some type of contingency that says if the appraisal does not meet the purchase price, then the buyer can essentially go back to the seller and ask for a price reduction, or maybe set the price to share in the difference between what the house appraised at and the purchase price, etc. So there's so many different scenarios, but knowing the value of the home is an important piece of the home acquisition process. And it's okay, you may decide that, hey, the house only appraised appraised at this. We know what's going on in the neighborhood. Maybe it's something that the appraiser can't use in the appraisal report at that point in time, but it's something that you and your real estate agent have talked about that is going to increase the value of the home. That's okay. But waiving the appraisal contingency means that you are saying, hey, no matter what this house appraises at, I'm buying the house. And many times that can be a mistake that buyers just really don't know, or that buyers back themselves into a corner and can't execute on. Outside of the home lending process, there are other costs that you will incur as you move through the process, even if you're a cash buyer. So be sure to talk with your real estate agent to get a detail of the estimated cost, whether you're using a home loan or not. And some of those costs would be home inspection. Even if you're paying cash for the property, you may want to get an appraisal, so that could be a cost. And then the title and escrow fees. Those are also costs of purchasing a home that you will have whether you use a home loan or not. All right, we are really cooking here. Another mistake we see people make is thinking they can DIY it. And it's easy to think this with all of these really cool shows, right? It's like so easy. Oh my gosh, so many times, the cost is more expensive than they thought, or they ended up having to hire it out because they weren't equipped to do it. So just be careful when you're thinking, I can fix that, I can do that. So be thoughtful about that. And lastly, if you are in a position where you've already been pre-qualified for a home loan, and maybe there's a collection out there, don't pay it without talking to your lender. This mistake really can impact your credit score. So if you have an old collection or an old charge-off, stop, don't pay it. It's counterintuitive to what you think. If you think paying it is going to help you with your interest rate or your terms, or maybe even increase your credit score, it doesn't work that way. I know it's crazy, but it's true. So don't make that mistake. Be sure to reach out to your lender, walk them through what your intent is, what you're thinking, and they will give you guidance on whether paying that collection or charge-off is going to positively impact your scenario or negatively impact it. All of this to say that working with a lending team that you connect with, and whether that's us or another one, that's okay. Like, follow your gut, but work with a lending team that is proactive on communication, that can help navigate this very complex process for you and get you to the finish line. That's ultimately what you're looking for when you choose a lending team. We look forward to having an opportunity to serve you and help you achieve your goals. Click the link below to schedule a 15-minute consultation just to walk through what you're trying to achieve and see if our team is a good fit for you. Thank you so much for watching. Please share this with a friend or somebody you know that this might be helpful to if they're thinking about going through the home loan process. And don't forget to subscribe. And oh, by the way, stay tuned for my next video.